this is John Kvale, and this is your April 2021 Capital Market and Financial Planning Review. And as you can see, I'm at my office, dressed reasonably nice, and I've even got a little bit of nice light here, so that's why I'm talking, and I'll push myself over into the corner, hopefully. So here we go. Boom. All right, as usual, newbies, for those of you that are in listen-only mode, driving down the road, keep your hands on the wheel. Please be safe. I always get a kick out of that. I don't know how much more legs it'll have on that, but I don't want to run this too long. So newbies, I do this. This is kind of a summary of the April posts, markets, and updates, and I do a verbal along with it to give more granularity of what we're thinking when we're doing this. One of these is in particularly very confusing. I'm not going to go into the whole details, but I posted on it a couple times. And without further ado, we're going to go on down to this confusing part. Those people that are in listen-only mode, driving safely down the road, I hope. I am rolling down to the stimulus rounds article. This is a summary of the stimulus rounds 1 through 3 stimulus funds explained. It is confusing. Donald and I got our arms around it this week, or last week, a week or so ago. Here's what's going on. If we had a higher income tax return on file in 2019 and the IRS looked back and you didn't qualify for some or all of the stimulus, you may have gotten a partial, you maybe didn't get any. When you file your 2020 return, if it's lower and you fall within the thresholds, which are in the post, broken down, those of you that are listening, I've got the post and for the amount of space we wanted to use here. I didn't want to put in all of the breakpoints, the phase outs. If you qualify for the round 1 or round 2 based on your 2020, it pops up on your sneaky line. I've named this the sneaky line 30. Of your Form 1040, and I've even got a picture of it where it's at. So if you see some funds in there, that is rounds 1 and 2. Now, recall there was also a $1,400 round 3 that recently came out, and if your 2019 return was too high, when you file your 2020 return, if it falls within the criteria, what the IRS is going to do, as I've marked here, those of you that are in listen-only mode, I've underlined this, is on September 1st, 2021, they're going to look at your 2020 return, and if you've not received the stimulus you should have, they're going to send it to you. Here's the deal. Do not file an extended return. If you file an extended return for your 2020, which can get you past that September 1st, you've missed the deadline, the look back period. They're not going to, at least right now, what we're told, they're not going to look back at it again. You only get one shot at this. So for those of people that are in the kind of the gray area. Now, one good thing, let's say your 2019 and 2020 returns didn't put you in the sweet spot of that. One more thing is this time next year, well, actually around April 15th next year in the 2021 look back, they're going to look at our 2021 return and see if we qualified for the 1,400. And if it does, then it's going to come back on our sneaky line 30. Whew. I'm going to keep posting these. I'll post reminders around September 1st for everybody to not file an extended return. But it's odd because no stimulus 1 and 2 are showing up on our return now. And then if we were phased out, the third round we'll take a look at in September. So there's lots of dates. It's like this ever-ending tax return filing time, date, due dates, and et cetera. Okay, enough of that. Enough taxes. We're moving on to the capital market comments, and I did a funny post. Not a funny post. It's a back-ended soft swipe at market valuations. I never want to say, hey, the sky is falling. But I do want to let everybody know valuations have been pretty stretched. And I go back, first of all, look back in March of 2020 when valuations weren't. That was the time to be greedy and take advantage of the situation. And we bounced back. I'm sliding on down. We bounced back rather rapidly. And of course, as markets do, they overshot to the downside. And now, in our opinion, they're overshooting to the upside. How do we work our way out of here? Great earnings. Hopefully with markets going sideways instead of extending themselves. The reason we care about this is you know, the higher it goes, if something does affect us negatively, then it's a sharper correction. So we're hopeful, but there's a little bit of parity in this, but there's a little bit of seriousness. And I heard this on a podcast the other day. Capital markets are the only store in town where when things go on sale, people flee the store. And it is true, But you never know. It's very fearful in the times when things are down, and then it feels euphoric when the times are up, and it's almost like you want to go against your personal feelings in both cases. So now's not the time to be swinging for the fences. We're cautious now, and certainly not being greedy. So that's it for April. We will talk to you at the end of May. Those of you that are in listen-only mode, I'm sliding back up to the top of the post. We thank you for your time. Have a good continued spring, and we'll talk to you again soon. Thanks. Bye-bye.